welcome to the stage Dave Mata. He is co-founder of BlockBits Capital and is going to be speaking about Blockchain 101, about different blockchains and cryptocurrencies.
Thank you. Appreciate it. All right, good morning, everybody. About 11 of us right now. Another rain, slept a little bit. So there's going to be a couple little interactive elements, particularly 3 slides that I have that are interactive. You can use your phone. Send a text to David Mata 839 to 22333, and that will basically initialize you as becoming a user. I'm using this software called Poll Everywhere. And yeah, best part, there are not any word filters, so keep that in mind. All right, next slide, please. All right, so what I'm talking about is essentially what is blockchain from a basic standpoint to kind of start off the whole program here. And the reason I speak about that is essentially a partner and I of mine came from the video games industry, and we decided to start a company that basically focuses on the venture capital side and the investment side of the blockchain cryptocurrency space. So we see a lot of neat ideas. We recently put on the Calibrate Blockchain Conference over in Spokane, Washington, and we have a lot of access. So we get to see a lot of different opportunities and ideas that are coming into the space. So from a top level standpoint, we can cover a couple topics here. What is the blockchain in and of itself? It's more than just what the media would tell you that is Bitcoin, right? Bitcoin is essentially nothing more than the subway token that runs the subway. It's a distributed real-time ledger, and what that means is there's no longer a central database that you have to worry about. So like Equifax, right? They lost access, somebody was able to access their database because some system administrator didn't hash them. You don't have that situation anymore because it's a decentralized system where every node on the system holds a mirror of all the data. The data is double encrypted. And then anytime one particular node is out of software compliance, the rest of the nodes force it to come up to the current version. So as I mentioned, it utilizes multiple layers of cryptography in order to secure the data. And at this time, there's no way to brute force it in, to break into the data that's provided. It's SHA-2, which is also known as SHA-256. They'll encrypt it, and then encrypt it once more. And then that second encryption is the hash that goes into the block. So you have the ability to limit access via permissions. If somebody doesn't have the key that accesses that particular piece of data in that block, they're never going to see it until quantum computing becomes something widespread. And one of the key features that we can look at too is the fact that it's called blockchain. It's a chain of blocks. If one block on one node is ever out of data compliance with the rest, the other nodes will force that block to be corrected. And it's a completely automated, no control process. It's pushed, and there's no way to prevent that from happening unless you're able to control the bulk of the transaction processing power on the network. So, could we go ahead and move to the next slide? This is our first interactive slide, so let's give it a try. The question is what is your knowledge level of blockchain? And so as I mentioned, pull out your phone, text David Mata 839 to 22333, and then once we have some answers, they'll show up. First few answers come in, and looks like there's a bit of understanding of the distributed technology, so I could potentially bring up the level when I speak here. Oh, that's good. Okay. Now for the folks that use Coinbase, I'm actually moderating the talk later with somebody from OKCoin. It'll be interesting. All right, so we can move on to the next slide. Thank you for interacting. We got one more. This is basically what words come to mind related to the topic of blockchain. And it's just very simple word. It can be a single word, or you can have, if you have multiple, just separate them with a space. And there's no text filters. Yeah, that's a good one. That's a really good one. Now it's interesting that fraud and secure are the first two that came up. Generally, when I see discussions about fraud and fraud issues related to blockchain, it's how to take blockchain as a technology to prevent fraud. When it comes to cryptocurrencies, it's the other way around. Fraud is being committed with cryptocurrencies. All right, buzzword's an interesting one as well. I could say there's some pretty decent validity to that, because what we're looking at overall in the blockchain space is that blockchain is being used as a buzzword to elicit greater amounts of capital formation, much like we saw during the dot-com era. Like what we saw with the dot-com era, there's going to be a lot of these companies that are raising, utilizing that terminology that are going to essentially crash and burn like we saw with the bubble burst. All right. Oh, this just keeps jumping. That's awesome.
Sorry.
All right. Oh, this is great. There's a lot of things that I think build on each other here. Fraud I mentioned, bubble I mentioned as well. A lot of people are very bullish on blockchain as an area of technology. And I think what we're going to be seeing here fairly soon, and we're already starting to see the beginnings of it, is that the bulk of the companies that raised in 2016, 2017, and early half of 2018 are already crashing and burning. They're already dying off. And we're going to see that, the future. We're going to see that the companies that do survive have the potential to actually become decently run startups, even though they have, some pretty crippling negatives applied to them. Okay, that's great. Future, ledger. Yes, blockchain is a ledger. Usefulness, I think, is a very important one too, because what we're going to see more of is that this is a way to secure data, transmit data, and validate data without having to trust the person or persons holding said data. And it's a completely different paradigm from what we have now. When somebody holds our data, be it our doctor holding our patient records, we trust that they're not going to do anything to them, modify them, lose them. With a system like this, we don't have to worry about that, because the data, once it's put onto a ledger, it's immutable, and unless that entire blockchain, that network protocol goes down, it's never going to be lost. So let's go ahead and move on to the next slide. And I'm going to, based on what we had, just understanding level of folks from the previous interactive slide, I'm just going to go quickly through this. Essentially, what is a block? A block goes into a chain of blocks, and that's, of course, your blockchain. In a block, you have header. That header identifies where it goes, and it gives the security information to say, this is the data I hold with it, this is the block that came before me, and then the block after it will use some of that data to identify itself as the next in the chain. Block hashes are SHA-256 encryption that has been double encrypted. And it will tell, the header data will also tell what Merkle root it's using, the random number nonce, timestamps, essentially everything you need to validate that the data transactions within that block are accurate. And then it holds the transactions themselves. So I'm going to go ahead and let's move on to the next slide. So the way transactions make it into a block is all the transactions that are requested are put into a pool with an amount of essentially money, for lack of a better term at the moment. How much somebody wants to pay to have that transaction processed. What the miners will do, miners in this case are nodes on the network that are actually processing transactions. They will determine which transactions they pick up based on preference for profitability. So the more Bitcoin, well, Satoshis, which is a fraction of Bitcoin. So the more you're willing to pay, the quicker your transaction will be processed. Fairly simple there. The processing, mathematical questions are solved. The first person to solve the enigma is going to be the one that owns the right to put the next block up into the chain, and they receive all of the reward for all the transactions that are processed within that block. And then the chain continues. And that's just a process that's been happening with Bitcoin for the last 10 years. Yeah, 10 years, 2009 to we're 2019. So let's go ahead and move to the next slide. SHA-256 hashing is also known as SHA-2. And as of right now, it's not easily broken, even by nation states. So the military has a hard time breaking through this data. The FBI has a hard time breaking through these data. And it's going to continue to be so until quantum computing comes up and becomes something that is more readily accessible than it is now. And at that point, a lot of people are concerned that security will bleed out of the blockchains. What they're forgetting the fact is that security software can always be updated. And when we have quantum computing, we will be able to have more powerful encryption methods. And one of the other aspects of security, and I kind of touched on it a little bit, is the idea of consensus. So if you are all different processors within a network, and one of you has a piece of data in a block, say you all have block 14, and one of you has a piece of data that is different from the rest, the people who have the data that is all the same will correct it. And that's essentially the consensus model. If you are out of step with at least 51% of the network will correct the data you hold. Let's go ahead and move to the next slide. Now, what we're finding more important is not so much what is the data architecture question or how are the networks built for blockchain, but why use it, right? And I mentioned earlier Equifax. One thing that happened with Equifax, and I feel pretty safe saying this, everybody in the room had their credit information lost. And it's now available to somebody with money. In this case, had Equifax been utilizing an internal blockchain, the ability for somebody to access the full data that they were holding probably still would have happened. But these data would have so many encryption layers within them that the data would be inaccessible and unusable, which would in turn protect us all. So if you have a system with potential for many riders, so in this case, ad networks, point of sale systems, and you can't trust these riders, they're not a member of your organization, they're not you, and you can't validate at the point of the time that they're writing these data. You can't trust them. And then you have a need for that data to be stored safely and for a long period of time. That is essentially why you would utilize blockchain technology. Now there's extensions to different blockchains, but this is kind of the core of the ledger right here. Let's go ahead and next slide. So beyond Bitcoin, there's, beyond the ledger, right? We have a few things, smart contracts. And it's essentially no different from any non-disclosure agreement that you have ever signed. You can take one of those and apply that to a smart contract basis, and that's simply making it programmatic. You put in what the requirements are, what states have to be checked for, and how it would validate, how the contract would programmatically validate those states. And then, in many cases, you would apply money to it. That's how an ad network likely would do it. I believe Nazarov, that was announced at Calibre Blockchain back in January, would do it is actually through a smart contract system where you say how much of what ad inventory you want, you put money into the smart contract, and then as those impressions are ticked through, data coming in from the network that you put those ads out onto, the pay goes to them incremental. And it's all processed on the blockchain. You can't touch it after it's been put out for processing. Virtual machines, several of the blockchains that are out there, network protocols, have what's known as a virtual machine, and those are being leveraged for different types of distributed applications. Now, a virtual machine is no different from what you would have from, say, a Java virtual machine. Ethereum is probably one of the earliest and easiest examples that we have to look at. It's a full Turing complete virtual machine. So anything you can do on your laptop, you can do on that blockchain. Granted, it's a lot slower. You're talking minutes as opposed to nanoseconds, but that same type of processing can be done, and that processing can leverage every piece of hardware that's on the network, which is where companies like Render come in. It's distributed 3D rendering over the blockchain. And what that does, it makes it so companies that are not Pixar, companies that still have smaller houses, smaller amounts of assets, and don't have the heavy software investment that a company like Pixar has, can still do best of class 3D rendering without taking weeks and months per still. They can get it turned overnight. So that is the distributed processing of the data. And then later today, a friend of mine, Jared Barrel, is going to be speaking with somebody named Keenan Linder. And he's actually got a pretty significant background on the gaming side of blockchain. People are often hear about things like CryptoKitties. What they don't hear about is the high degree of casual fraud that occurs in mobile gaming, and how blockchain can actually be used to attach user identity to user transaction and cut that fraud. Let's go to the next slide. One I didn't mention yet so far, and this was recent news, IBM's Blockchain Labs worked on some logistical solutions for blockchain. And what they did was they tracked the shipment of a container of mandarins from mainland China to Hong Kong. And so now we have a use case starting to emerge of utilizing blockchain in order to track logistics chain issues. One of the things that I see in Washington State right now is that there's a lot of interest in tracking cannabis from seed to the grow, to the processor, to the actual retail purchaser. And blockchain would be a way to do that because the data can never be changed, and then the state themselves could have the master access to all these data. And then one other interesting one to talk about is the idea of file storage. You have all of these computers that are connected to this network, and they're essentially no different from any data center that we're already used to, which means these computers have a significant amount of just data storage that's available. And so there's several different protocols that are actually utilizing that data storage and paying on a per byte or gigabyte basis. Storage, Filecoin, and Spin Backup is one that's actually integrated with G Suite. Let's go to the next slide. Now, our last interactive slide. What words come to mind related to the topic cryptocurrency? And I left this for the end because it's significantly different from blockchain. Cryptocurrency itself is the token that makes payments to the system providers, essentially. Like I mentioned earlier, it's like tokens for a subway. Yes, speculation is kind of a big word right now. Uncertainty, I'd say, is a very good one as well. What we see is there's a significant bear market right now within just the trading of cryptocurrencies. And that's one of the reasons for that is that the retail market, the retail investor, is driving cryptocurrency speculation, and they're not a good market to drive. The other reason we see is that a lot of the companies that performed raises have not delivered on any of their promises. In fact, I'd say a good 90% of the companies that raised money since 2016 have not delivered on a single promise.
I just want to do a quick 5-minute announcement. So if you have any questions, feel free to raise your hand, or we also have Slido.com. So if you go to Slido.com, put in hashtag MGS19 and type in your question for the Franciscan room, I'll be able to make those questions aloud for you. So either way, but we have about 5 minutes left.
Okay. And if you don't want to use Slido, just raise your hand. Right now we're talking about cryptocurrencies, and that's kind of the rest of the content that I've got slide-wise. If you prefer to ask questions about blockchain, I think that would be a little more useful, because blockchain is really the business side of all this. Cryptocurrencies are really, I mean, you know, a token in the market. They are essentially a chit, prepayment for future services, which is something we're used to with virtual currency. Okay, let's go ahead and, that's interesting, Swift. Now, one of the reasons Swift catches my eye here is when you do an international wire, it can take up to a month, depending on the size of the wire. When you do a transaction, regardless of size, on even Bitcoin, you're looking at 2-3 hours. So there's a chance for movement of capital to really expect worldwide that I think banks are really going to warm onto once they get over their fear.
All right, question came in. Is there value in stable coins?
All right, identify yourself, because I'm going to throw some questions at you. Jared. Look at that, my clients in the audience. Okay, so first question would be which stable coins, right? You have several classes. Okay, some are backed by gold or other assets. Some are backed by handshake and promise. Some are backed by claims of transparency. So you have essentially these 3 different ones. And, you know, the backed by assets ones, those are generally gold coins. I think those are actually fairly smart, because the theory behind it is every time you buy one of these coins, and there is a similar amount of gold in a vault somewhere back that you can have them surrender at any time. I think that's fantastic. Right, then you have Tether, which is promises of transparency and it's not a handshake. Now, the Tether Foundation claims that every dollar spent, every US dollar spent to buy Tether is going to be held in reserve. Yet, at no point have they actually gone through with a full audit. And there's many in the industry that have been challenging them to do so, but as of yet, the best transparency they can show is that they're not holding a one-to-one in their reserve. So I think that's a little dangerous. Plus, there's variation in value. When I was looking at Tether earlier this week, it was valued at one Tether was valued at $1.01. Sometimes it goes as low as 97 cents. For a stable coin, there should not be variation. So, that kind of answer.
Sure. Yeah. Another question about that. You know, in the context of what we're doing here in mobile growth. In the context of what we're doing in mobile growth here, do you see a value of stablecoins as a way to onboard real currency into a digital environment with the ability to track the who's handling the money when? So if I put money onto a game and I'm using a stablecoin, for example, effectively the stablecoin might be responsible then for evaluating the use of that and evaluating is it real money before it then goes to the game developer, which is a massive issue we've had in the industry, is chargebacks.
Yeah,
Needs to be a solution.
Yeah, when I was working on Enemy, a full 4% of our revenue was lost to chargebacks. So reframing it a little bit is, can a virtual currency with identity attached utilize as a gateway from US dollars or whatever fiat into an in-system currency for usage? Absolutely. I think that's going to be the most useful way you can build cryptocurrency into any product, is essentially creating a network of places, essentially a virtual mobile mall, right? You go in, you buy a certain number of Jared bucks, right? You can buy them, you can spend them anywhere within that system. And the people that are taking that currency have agreed that it's pegged to a certain value. And so essentially, that cryptocurrency, that stable coin, is a pre-purchase of services that people are going to trade in as a chip or a coupon in the future. And that's how we ran our mobile games. Absolutely. I think that's the smartest way to see a stable coin work. Is it something that we're going to see anytime soon? God, no. There's too much up in the air right now. A lot of people trying to stake their claim, and not a lot of people trying to create groups that are going to work together to utilize the same currency. So,
Great, and on that note, we are at
We're done?
time. Yes.
perfect.
Thank you, Dave.
Thank you, everybody.